Google data shows that searches for hotels and resorts are at their highest level in nearly a decade. Americans, they're done staying home. The roaring 20s are here. And as more and more people get vaccinated, they are taking to the roads, to the skies, and to hotels. We jumped back into airline stocks and hotels and cruise lines and casinos way back in November. We went in big, and all of those stocks are up right now. Right now could actually be the time that we would be looking to sell some of those. I mean, American Airlines has doubled in 5 months. But yesterday, we saw something in the Google Trends data that told us not to sell. In fact, it made us want to double down. So today on Dumb Money, we're going to tell you what we're buying, and we're going to dig into that game-changing Google search data that convinced us to go even deeper into margin. We are Dumb Money.
Three friends who turned $30,000 into $30 million using nothing more than Twitter and a zero-commission trading account.
The suits that work on Wall Street, they call those people the smart money. That's not us.
Our goal is to help level the playing field for everyday investors.
We are Dumb Money.
Hey there, Dave here along with Chris and Jordan. We are Dumb Money. Welcome to Dumb Money Live. Some fun facts while the last few people scramble to find that like button. American Airlines said last week that bookings are already back to 90% of their pre-pandemic levels. Their flights are 80% full. And that was last week. That was like the end of March data. I was on a flight yesterday and it was definitely 100% full. United Airlines last week announced that they are hiring 300 pilots. The TSA is reporting over 1 million travelers every single day. They've been seeing that since March 11th. A third of adults in the U.S. have their vaccination shot, have at least one shot, 19% fully vaccinated. Chris, Jordan, I hope that gave everyone enough time to find the like button and for Chris to set up his studio. But if you haven't liked the like button or smashed the smash button, you know that that's the thing that makes us happy, and it's what keeps us on the air. So do that now. Tap it. It helps us get discovered by the YouTube algorithm. So let's talk trades. I feel like I'm already all in on Roaring 20s and Bounce Back, and I keep waiting for like a sell signal. But Chris, you were up all night last night.
I can't just talk trades. You have not even talked to us. You've been at conference. Just give us a couple minutes, dude. Like, what? How was your trip, dude?
It was great. It was great.
Did you go to Annapolis?
I went to Annapolis, a place that I had never been, but my girlfriend went like last year, and she loved it. And it's just such a cool old world town on the water. You know, we got to have nice seafood and just wandered around and looked at historic homes. We actually met with a real estate agent to see what it would be like to buy one of those little properties. And then we also took a tour. About that? You know, my whole thing is I want to find less expensive homes than where I live here and have a couple of them in different places that I would like to travel. And this is a place that I could definitely see myself going back to, and I could see perhaps spending several months of the year there. But I think I'm going to do the Airbnb thing. I stayed in an Airbnb, loved it. The Airbnb, the host that I was staying in, recognized my profile picture from my Airbnb because it's the same one that I use on YouTube. And they're like, we Googled you and we found your YouTube channel. We watch we already watch your content. We watch finance videos, and so it's just crazy that I guess I'm somewhat of a pseudo celebrity now.
Oh man, in Annapolis. Dude,
apparently.
That is so random, man. That is so random. So much has happened, dude. Like, I don't even know where to start.
So much has happened. Nothing has happened. I was on vacation. I kept checking. And you were like, no, there's nothing I need to worry about.
Did you try the cookies? Did you taste test the cookies and do the survey yet? That was your mission this morning.
Not yet.
You didn't do it after the show.
I was up all morning researching trades.
Okay, so we have, for those of y'all that know, we have a cookie company that's going to be launching this next year, and we have been working on the formulation for almost a full year. Dave, we're like this close to the end. Jordan, I know you're not going to taste this batch because you don't want to make the drive, but Dave, we got to get your input like in the next few hours.
I have them. When I got home from my trip, sitting on my mailbox is a Ziploc bag with some random cookies sealed in numbered blind taste numbering, so I can. How many different ones do we have to try this time?
4.
Another 4.
And they are like, I'm really happy about them. So like, I want to see what you think, but like, you got to get.
We were really close the last time. I was very happy with a couple of the ones last time.
Yeah. Yeah, no, that we're getting really close. I think you'll like it. Also, by the way, stick around to the end of this episode. We will discuss a couple of our private investments that we're in. Gosh, we have a huge IPO coming, and we just learned about one of our private investments that is up 15, 15x from where we invested a couple of years ago, and is likely, I would imagine, they're going to IPO too at some point in the next 12 to 18
See, I always
months.
thought they were going to get bought, but yeah.
Well, we'll tell you about that at the end of today's episode, so stick with us. I do want to say something before we get started, guys, because we are going to go over some tickers here that we are buying. And the last time we did this, one or at least one or two of these are kind of low float, low volume stocks. And last time we did this, I think like people that were watching the episode like rushed in and purchased Funko, drove the stock up 25% in like 30 minutes. And then it came right back down like I knew it would the next day. And now it's kind of crept back up there. But listen, we're not financial advisors, and we don't just say that to say it. Like, legit, we're not financial advisors. We do not want you to ever watch this show and let's go purchase something. This is about discovery. It's about debate, due diligence. It's about hearing our opinions and then adding your own opinions to those ideas on our Discord community, which is dumbmoney.com/Discord. Do your own research. Make your own decisions, seek advice from a financial advisor if you need to, but we don't know what your risk tolerance is. And this is for us. This is what we're doing, okay? So please do not go out there and just start buying what we talk about. There's just so many things wrong about that. I don't even know where to start, not to mention the fact that you'll probably end up getting screwed because a lot of the stuff, if it pops up indiscriminately, it will come right back down, within hours or the next day or two. So that said, guys, how long have we been talking about this Roaring 2020 trade? Over about a year now. I didn't think we would be coming up with additional trade stuff.
Yeah, no, as the world was starting to lock down, we already were predicting and called it the Roaring 2020s. We had an episode all about that like a year and a half ago. I mean, it was one of the first things that we were talking about. And then I went back to figure out what month we got all in, and that was right when the vaccine was announced. The efficacy numbers were so much higher than we were anticipating, and so we went in so big on these bounce back stocks, on these travel stocks. And so like I'm literally thinking, I don't have more money to throw in these. And so to want to go even deeper on margin, this is like just new territory.
Here's the thing. But here's the thing. I mean, there's always going to be new opportunities that come up because there's always going to be slight dislocations that happen here and there as we find out new information, or new shortages pop up here or there, or people's preferences change, a little bit over time. So we're always going to find these things kind of pop up.
The risk profile is different now than it was when the vaccine first came out. Yeah. We were confident then, but there was still this whole, are we too early? Is the virus going to mutate, right? Or there were still some pretty big risks, and we were fairly confident that we were going to double our money in most of those stocks, and we have. It's been insane. Like I always said, we will always regret not investing more, and here we are today. And I personally regret not investing more, even though I think we'll look back at the recovery trade, and it will probably be among the biggest trade winners of the year for us in 2021. I am up, I don't know how many millions in the recovery stocks, but there is a difference now in that I think before I said, don't overthink it. I always said, don't overthink the recovery stocks. It really doesn't matter where you're investing your money, because ultimately it's not about which recovery stocks actually perform best in the real world. It's about what investors anticipate will perform the best and which ones get the most attention. And that's exactly what happened, right? Nothing has actually come to fruition yet. Very little information has come out about any of the recovery stocks really accelerating and getting traction. It's really all right now just perception, and everything has gone up. Every recovery stock has gone up, nearly every single one. So it really didn't matter where you put your money. Now it's a totally different situation. A lot of these recovery stocks, if you're a fundamental investor, you're saying, well, they're too high. They're already trading based on a full 2022 recovery. So where's the upside? And you know what? You might be right. But are there some trades that or maybe not quite as hyped, right? Are there still opportunities, and maybe not opportunities to 2x your money in an equity, but opportunities where if you go in fairly large, like I'm willing to do, I think there's still an opportunity to see some price appreciation over the next few months as we actually start to see the data coming out, and it's as good as all of us thought it would be this summer, right? Because there's still plenty of conversation out there about, you know what, business travel is not coming back, right? You know what, it's going to take longer. You know what, Europe is still shut down, and that's impacting a lot of these destinations. You know what, it's still going to take longer than people think for it to really ramp up. I see a lot of conversation about, you know what, these things always take 2 to 3 years to normalize. I don't believe that at all. I don't believe this is a normal situation. I believe this is unprecedented. I believe this is an anomaly. I believe the snapback will not just be immediate, but will be bigger than anything we could imagine. And what is the reason why we're filming this episode today is because I've been checking search data nearly daily for the past 8 months on call it, hotels, vacations, cruises, right? Like there's dozens and dozens of keywords I've been checking. And sure enough, about 2 to 3 weeks ago, I finally started to see what I've been waiting for, which was just a massive acceleration in some of the basic tags, some of the basic conversational tags that would correlate with the recovery heating up at a level that I think is beyond what people are anticipating. And I think we've experienced it in our own travel, right, guys? Like Dave, you're out there, like you can feel it, right? You can really sense it. And it's not national, by the way. It's not national. And that's the most impressive thing, is that there's still pockets of the country, there's pockets all over the place that are slower to get vaccinated, and they're not participating. So this is even with those pockets kind of like behind the curve. We're still seeing data for the first time. And Dave, I think we should start with the data because, the word resort, the word beach resort, these are tags that normally don't spike until June, okay, every year. Right now, at the end of March, early April, because that's kind of what we're seeing right now in search data, we are at 10-year highs on some of these tags. And it wouldn't super surprise me to see 10-year highs in June of this year, but to see a 10-year high in March, April, when we don't normally get that spike, is quite honestly, it floors me, but it doesn't necessarily surprise me. This is what I was anticipating, but now that I see it, I think there's a window to just dig in a little bit deeper on some of these trades, even though I think we're at the tail end of, the social arbitrage window in terms of hitting information parity. The information parity is not quite there. Now, what made me really nervous is I've been watching the data, and then yesterday I'm on Twitter, and people are like, Google put out a report that said there's a 10-year high. I'm like, oh no, we got to get this. We have to finalize these trades and get our episode out because, it won't be long before information parity hits the market because people will start to see this and companies will start to report it. They're going to be like, in the next 5 weeks, guys, we're going to get earnings on a lot of these companies, and they're going to come out and they're going to be like, oh man, we are seeing bookings, like insane bookings for summer, right? Summer, fall. Yeah. By the way, I told you guys, I want to talk about my Thanksgiving vacation I take every year in New York. We didn't take it last year. I was so blown away, and I told you this, the hotel I normally stay at was completely booked the day before Thanksgiving. This is two or 3 weeks ago when I was going to book. I was like, how is that even possible? Completely booked. Not one room in it for mid-November. Just kind of a random hotel in New York. And then all these people I know started talking that go to New York started saying the same thing. And so I booked another hotel, but wow. That just kind of shows you what the back half of this year is going to look like as it relates to travel. It's just breathtaking. So sorry for that ramble, but I just want to set the stage for why we're
just
doing
also just I just booked a hotel that should never be this expensive. You and I are going on a vacation together, Chris. Did you realize that?
Yes, we are.
I'm
First time in a long time.
at the hotel, like right at the base of the house that you rented, right? So
yes.
I'm on the beach and you're at a house overlooking the beach. This hotel's for like 6 nights, 7 nights, it's $11,000.
But that's a really expensive hotel too. You're literally talking about staying at like one of the nicest beach hotels on the East Coast during midsummer. Like that hotel is always that expensive. It's not even like charging a premium. They're just
no, it's not because I looked. If I went there right now, this is definitely not peak season.
In July,
Yes.
it's always listen, the Northeast, they have like 6 to 8 weeks of prime time for these beaches, and they make all their money in the 6 to 8 weeks, and like that's when you're going. So,
but talk about your car rental. I've not even rented my car, not booked it yet, and I need to do that immediately because of what you were telling me yesterday. You couldn't get the car that you needed. You couldn't get the size that you needed.
I finally got it, but not through either of the rental agencies that I normally go through, which are Avis and Hertz. I had to go through National to find a 7-seater car SUV that still had luggage capacity. It was pretty mind-blowing because this is pretty far in advance to be booking a rental car. So that led me on a journey. This episode's really a journey. It's a journey to find the last recovery stocks where there might be some opportunity. And I think I want to start by saying I have 3 trades that I made that I kind of dipped another $1 million into my margin to make over the past, few days. And the first one is probably the most ridiculous, risky one, the one that everybody thinks is overhyped. And I'm doing it anyway. Like this stock is trading so high that any fundamental investor can look at it and be like, dude, if everything goes right, they're already valued at what they need to be valued at if everything goes right. But here's my thesis on this stock. I think everything is going to go right and then some. And I think all that information is going to hit in the next 6 to 8 weeks. And the stock is like 20% shorted. So even though I think we're kind of close to information parity on it and it's super risky getting in this stock, there's so much headline news that's going to revolve around this company's products that I just think people are going to get overhyped and overbuy it, and then the short sellers are going to get squeezed even more than they already are. And I think there might be an opportunity. Now, it's a crazy one. There might be an opportunity to make even more money on this stock, even though it seems like it's way overbought. It's Avis, guys. And we've been trading Avis for like 9 months now. Avis is trading up so high. But I spent probably 6 to 7 hours researching just Avis over the past few days. And I am telling you, this company is just doing everything right. And I'm sorry, guys, hold on. I want to make sure. Oh, wait, can you open garage? Shit. Yes. I got to open my garage for my contractor. Shit. Can you talk about what you think about this? Hold on. I'll be right back. Give me 2 minutes.
He just bails.
What kind of a professional program are we running here?
Very unprofessional program.
So he needs to, first of all, invest in a way to open his garage door from his phone.
Well, I think the biggest thing with this one is that, and this is a headline too, right? That Kia, like these Kia cars are going for like $300 a day in certain locations, from Avis, right? And so you have hugely inflated car rental values. I'm hearing this, not just headlines, from stories from friends and relatives that they're having a hard time getting decent priced rental cars too.
Well, and I just rented a car also, but I think it's really concentrated in the travel destinations. So you can get them in less popular destinations, and they've basically haven't been able to shift all of their inventory to where it's needed. But we've seen the rental companies basically had to sell off all of their fleet to be able to afford to pay the electric bill. And now they're scrambling
to service their debt,
cars.
really, right? Because they're all crazy leveraged companies, right? And so that's what they were doing, is they're trying to deleverage a little bit during the downturn.
Yeah.
And so now that's left them in a short place where they can't get enough vehicles, right?
And there's a shortage of vehicles in general because of the chip shortage. So manufacturers can't make cars fast enough. Rental car companies can't buy them fast enough. They're trying to take their remaining inventory that exists and shift it around.
Right.
Chris, you're still on the air, by the way. I don't know. Yeah, you're still on, Chris.
I know.
Okay.
I know I'm on.
Very professional.
Okay.
Yeah. So basically, Avis.
Dude. Okay.
Unlike this show, they try harder.
Okay.
Wasn't that their slogan for a while?
I think so.
Dude,
Sounds right.
Dave.
Yes.
Dave, they do.
Yes.
So let me just kind of give some background on what's going on at Avis. Okay. First of all, so this is something that I think is definitely I think a little misunderstood about a lot of these, really the whole market this past year, when people are thinking the market is spinning out of control and it's getting overhyped. The amount of efficiency that has been brought into the market over the past year in terms of companies that are leaner, that have done cost cuts, that are now operating at productivity levels a lot of these companies have never seen before. It's just completely impressive. Avis is one of those companies. They've taken $2.8 billion of expenses out of their business model. Some of those are fixed. Some of them are, a few of them are variable, but that company is so lean. Hertz had to sell off about 40% of its cars, okay, over the last year due to bankruptcy. Hertz also owns Hertz also owns like two of the other rental car companies, right? But they sold off 40% of their cars.
Yeah,
now,
and most of these
Avis
rental car companies are operate multiple brands, right? So we have Avis is also Budget. Hertz was also, yes. I can't remember, but they basically operate a more expensive brand and a less expensive brand. Right. I don't know why.
And then I saw some questions come across why Hertz and why not some of the other ones. Like Hertz is the only game in town for these rental companies, and they're the only ones that are publicly traded
Hertz?
right now.
We're not talking about Hertz. What are you talking about?
Not Hertz. I mean, sorry. Why Avis? And I'm like, they're the only ones that are publicly traded, right? So for instance, is a private company.
There's not much left. Okay, when it comes to this, there's basically Hertz and you have Enterprise as well, but you have Hertz and Avis are the two big ones. Now Hertz had to sell off so much of that company. And they're so impaired right now that it makes it really difficult for Hertz to readjust as demand starts to come back. Avis sold between 20 and 25% of their cars, and they're already starting to build back inventory, okay? Now, one of the headlines that you might have seen this last week is that rental cars in Maui, the cheapest rental car in Maui was, I think, what did they say, $700 a day for like an efficient, like the smallest, cheapest rental car in Maui last week. Yeah. Okay. So I checked this and I actually found rental cars in Maui this week for like $400 a day. And then they go down obviously over the course of the next few weeks and months. But one thing I thought was really interesting, the rental car demand in Hawaii is so strong that Avis is not even listed anymore. Neither is Budget on any of the car rental aggregators or sites like Travelocity, Expedia. So, Hertz is there and all their brands. Avis is doing so well that they're like, listen, they have cars for rent, but they're like, we're not going to pay any commission on this. I think that's a precursor to what we're likely to see in a lot of U.S. markets and eventually global markets over the next year when it comes to rental cars, because the market has been rationalized, okay? And what that means is that they've taken so many cars off the market that pricing, just natural price demand goes up. And I look back through an old Avis deck from 2014. I thought I had the image, but I can't find it. I was going to share it with you guys. I pulled out a page of that deck, and it was essentially talking about how they drive up margins. And there were kind of 6 ways that they drive up margins. The number one contributor, here it is, the number one contributor to EBITDA is, more than anything else, there is rental days, utilization, per unit fleet costs, employee productivity. But the number one driver is average daily rate. Okay, average daily rate. Well, we've never seen an average daily rate this high, I think, ever, when it comes to rental cars. If you go on Twitter right now and look at just type in rental car sold out or rental car expensive, you will see people tweeting all across Florida this last week for spring break, last couple of weeks. Yeah. They were completely sold out of rental cars in South Florida. Completely sold out. You cannot get a rental car anywhere. There were people showing up for spring break and their car was canceled for one reason or another because they kind of oversold inventory, like rental car that do.
Yeah.
And people are like, I just took the most expensive Uber in my entire life because there's no cars available. I think we are going to see this happen over and over again, not for the next month or month and a half, but as soon as school gets out, right? I think we'll see this basically all summer long in all the hot destination sites. I think there's a headline story here. I think this is unprecedented. I think the daily rate that we will see for rental cars this summer will be so astonishingly high that it's not in anybody's models, okay? And you have a company like Avis where it's like, God, it's trading so high, it's ridiculous. It's 20% shorted. I think the good news is going to continue to pile on, and where companies like Hertz cannot normalize their fleet quick enough, Avis, while it will be difficult for them to normalize their fleet as well, because as you saw, GM just this morning is like pausing production at some of their plants because of the chip shortage, they will be best suited to normalize themselves quicker than any of the other companies. They have the best relationships, the most capital, right?
Yeah, and I was just on the Avis site doing a quick search in Maui to see what the rates were. They're completely sold out. I picked, 2 weeks from now, just as a random date range, and they were completely sold out. I went deep into the summer, and I did find this economy Ford Fiesta or similar is $633 a day.
Wait,
if you pay now, or $666.99 if you pay later for an economy.
So here's my thought, Chris, and I love the concept here, but here's my, I'm having a problem with this because there are certain people, they're just not going to pay that, right? And so you go to Maui, like me, I would never pay $600 for a Ford Fiesta. So what I'm going to do instead is I'm going to go and I'm going to take a Lyft to to my hotel, and then I'm going to, bicycles or Lyfts or Ubers, and I'm going to get around that way instead of paying crazy amount of money to have this car sit in a garage in my Maui hotel, right?
Yeah, and so just in general, I think traveling car rental is the last thing that comes to mind unless you're in specific cities. Like I choose to Uber or Lyft everywhere except for when we went to Los Angeles, and Los Angeles is like a driving town and everything's locked down still. So I did rent a car there.
Yeah, right.
Jordan's going to take an Uber to Hana on the road to Hana. Jordan's going to take a $5,000 Uber to Hana. Like, do you have any idea how much you can't do?
Maybe that's one day. So maybe I rent the Fiesta for one day, but I'm not going to rent my whole 7 to 10 day vacation. What I'm saying though is this better for Uber and Lyft because now it's got more competitive pricing, right? And
but the vehicles you want,
it's cheaper to get that Lyft than it would have, in other times.
Okay, well here's the best part. So this is where it gets really interesting, is because Avis has diversified their business so well over the past 7-8 years that they have 3 other divisions, Jordan. I think you'll like them, okay? I think you'll like all 3. And these other 3 divisions are really killing it. They're killing it, and they're big. One is their ride-hail division, Jordan. So the Uber driver that you're going to take paying 4x rates, because that's what they're going to be charging you in Hawaii, maybe 10x rates. Do you know where a lot of them are getting their cars from right now? They're getting them from the ride-hail division of Avis.
No, you are right. That is a thing.
And they're paying $600 a day, and so they can charge you $300 for a 40-minute ride. Okay, so they're going to
take a 40-minute ride in Maui. I mean, unless I'm like all the way on the east side, I'm going over to Lahaina or something like that. But everything's in like 15 minutes from where I'm going to go.
Everything. And plus, I'm going to take like a 4-hour ride.
I'm taking that Lyft because what if I go out and I go get faded somewhere and I don't want to drive my rental car? That's the whole benefit of having Uber and Lyft is you can go, enjoy yourself to the max and then get back.
Fine, they both win. I think you'll also like, Jordan. You might or might not know that Avis owns Zipcar, which now has like a 250,000 or maybe more. It could be more than that members. Zipcar has been absolutely killing it because people are looking for a way to hop in a car in their city and get out.
Just short term. They're short. Right? So for people that don't know, Zipcar is like a short term rental. You can just go grab the car, use it for a few hours.
But you know what's really been killing it is budget truck package delivery. So they have a division that's been accelerating, and they essentially are now the last mile delivery trucks for all these companies that are hinged on to Amazon, right? And all the delivery services. So, man, Avis is just killing it. And everywhere that you look, the only last kind of remaining thing for Avis is business travel. And that's what, you can make a case that business travel is not going to come back for a while. Here's the thing. I don't know if I'm going to be invested in Avis when business travel matters next fall. For me, I think the summer months are going to crush. I think we're going to see, and I've said it 100 times, I think we're going to see a summer travel season that is going to exceed everybody's expectations. I think it is going to blow everyone's mind. And I think rental cars are going to be sold out or selling for ridiculous daily average rates all over the North America, at least. We'll see about Europe. They're a little late to the game here. But if Europe starts playing in this, because that would be the one weak spot for Avis right now, it's game over. You have a shorted stock. And again, it's risky. This is the riskiest of my three, I think. But I'm in it. I don't care. I'm going for it here. I'm telling you guys, like they are so.
What I like about it, I think you're absolutely right, because they've already scaled back their business. They've streamlined their business to survive nobody renting cars. And now all of a sudden, out of nowhere, everybody wants to rent a car, to the point where they're going to be out of inventory, and they get to drive their prices up. And so there's not a way for them to ramp up their inventory fast enough, because they can't get cars. They can't buy more Ford Fiestas right now because Ford doesn't have enough chips to make the car work. And so, I mean, yeah, it's just kind of like it's a perfect storm for rental cars. An industry that normally I would not
wants to
be
rent
in
cars
for long term.
Except for me, because I want to get Faded, so I want to go take my Lyft. And so I haven't bought it yet, but I might buy some Lyft.
All right, and listen, I thought about Lyft is maybe not a bad trade at all here. By the way, I'm nothing against Lyft at all, and I think they will definitely benefit from this summer's travel. But man, I'm telling you, Avis has already said that they are prepared to increase their fleet levels higher than 2019. All right, they're prepared to do that. They're working on that right now. They haven't pulled the trigger on it. I don't know, or maybe they have. They haven't announced it yet. Maybe we'll find out in the next earnings. But they do have really strong relationships with, I think, 16 different OEMs. And I think they will be able to acquire a good bit of inventory this summer based on what they're seeing. Now, they've been holding off on it because what happened was the rental car industry had a really good, I think it was September, October. Everything completely fell apart in November, okay? Then things started to pick up a little bit again during the holiday season, late holiday season, and they completely fell apart when all the restrictions came back in January, okay? So if you listen to their last earnings call, it's just like a roller coaster. So they're trigger shy, and on one hand, they're seeing like green shoots of opportunity and business. On the other hand, then everything comes crashing down. I think looking forward, I don't see another crash down. I think we're in the clear, and I think the next earnings call is going to be probably one of the most exciting earnings calls in the history of any rental car company.
See, I think this is we're at a very delicate balance right now, because their stock already shot up so high that I think that there will be a crash down. You can't really justify something that looks like that's a 5-year chart. Like, yes,
I don't know.
We can say that maybe
can't justify it, Dave. We know that with Hertz, how big of a hit they took, that Avis was going to get a lot of benefit in the upswing when things started to upswing, right? And so I don't think it's high, right? But it's not crazy.
So understand this. You have to understand how efficient the company is now, right? How much leaner they are, right? So understand, they've come out and said that at 2019 revenue levels, if they can get back there, that will produce $1 billion in EBITDA. All right. They already said they will be at $1 billion in EBITDA, annualized EBITDA at 2019 revenue levels. Now, you also heard me say that they are preparing to potentially increase their fleet size beyond 2019 levels. And we are maybe looking at a situation where their chief competitor cannot normalize their fleet maybe through all of 2021, and we might see inflated rates really going into 2022. We might be looking at maybe the best 18 to 24-month period in the history of rental cars coming up, right? So yes, it's ridiculous, but it's ridiculous for a reason. And I think there's still a section of the market that doesn't quite understand the narrative and understand the opportunity for a company like Avis. And it could get more ridiculous with a 20% short interest. That's all I'm saying. I'm not a fundamental investor, right? I'm not saying it's worth what it's trading at. I'm not saying it's worth 30% more than it's trading at. I'm not looking at price. I'm trading information. I think the information that we will see on Avis over the next 60, 90 days, will be astonishingly good. Now, whatever happens, happens. Maybe people sell off at that point. Maybe the shorts win. I don't know. But I'm willing to put some money, even at these ridiculous levels. I'm willing to risk some there. So that's it. Whew. I thought we'd blow through that one pretty quickly. The good stuff is still to come.
As a reminder, stay tuned to the end because we're also going to be talking about, I mean, we're not going to have time to talk about private investments.
Maybe we will. So guys, here's...
Okay, what's number 2?
So I just want to say something. When I say that I've been scouring for like recovery trades that still had some juice left in them, I mean I have looked at every single recovery trade that is known to mankind, like every one. I've looked at every single one. And some of them I'll spend an hour on them, right? And it's like, can't do it. It's like information parity. Like it's really tough or it's getting really close. But I love aspects of the hotel sector, but just certain parts of the hotel sector. So I've been trying to find hotel trades that just weren't reliant on business, because I do agree with the thesis that business might be a little slow to come back. I think it will come back to some extent. I don't know how much it will come back. It might not be 100%. It might be 70%. I don't think it's going to necessarily happen this summer, though. I think it might not happen till the fall, right? Or maybe even next winter. So like, I don't know when that's going to happen. So I'm not willing to invest in companies like Marriott here. And by the way, Marriott's already, dude, they're killing. I mean, look at the stock chart. It's ridiculous. But are there other trades that are more niche that have more of a focus on not just consumer travel, leisure travel, but specifically resorts? Because like resorts, I think is where it's at. And did you pull that Google Trends chart, Dave, on just resorts or beach resort? How about just go to a beach resort even? Like, it's pretty phenomenal in the U.S. It's pretty phenomenal. And again, this is a chart that's not supposed to spike until June.
Okay, so this is hotels, and hotel is red, resort is blue. Let's put up beach resort instead of hotel.
Beach resort, you won't be able to see. Yeah, I mean, you might need to get rid of.
We'll get rid of regular resort.
So look at that. Oh, look at this. There's the regular resort.
That's regular resort, and then here's beach resort.
So
5 years.
Man, but can you show us, like, for 2018, that was the last 19, that was the last normal year, where we were at the end of March, early April.
Yeah. So March 31st. 72, 65, April 14th, and today's April 8th. So let's just look at exactly where we are today. So March 31st through April 16th was 72, and today we're at 100.
Yeah, I like that, guys. And we got to remember, that's still with a big part of the country kind of a little bit behind, right, on vaccinations. Here's the thing.
Well, I mean, look, this makes perfect sense, though, right? I mean, you can't go travel anywhere, but if you're going to travel, you're going to go to a resort, right? You're going to go do the beach resort. You're going to get out of your town. You're going to go there, right? And then if you can find a business that is concentrated in beach resorts, they've got nothing but upside. Because I was looking at Hyatt, right? And so they normally book at like 66% occupancy rate. They went down to 40%. Right now they've made it back up to 50. Maybe they get back to 60. But the problem is they do have resort properties, but they also have a ton of properties everywhere, and that includes business travel and all this stuff that you don't care about. So if you can find that concentration in beach resorts or in getaway destinations, that's where you want to be.
Yeah, so I had two that I looked through 20 different hotel REITs, roughly 20 different hotel REITs. I found one hotel REIT that I thought was really interesting, enough that I did open up a position in them. And the symbol is BHR Properties, okay? Braemar Hotels and Resorts. So here's a stock that has not yet fully recovered. It was at like what, 9-ish prior, 9-10 prior to the pre-COVID.
Yeah,
it's recovered up to 6. And here's what's really interesting, Dave. I thought you would like this. First of all, let me just say this: over half of their properties are in states with really high COVID rates, California and Florida. Okay. So what's really interesting is this is a company where 8 of their 13 properties, they have 13 properties. 8 of them are resorts. 5 of them are like city hotels that are relying on business. But listen to the resorts. I'm gonna just kind of list them off, and you can pull them up if you want, Dave, because it's pretty spectacular. The Ritz-Carlton Sarasota, all right, which is just a killer resort in Florida. They have Bardessono and Hotel Yountville. I don't know if I'm saying that right. Those are both in Napa Valley, okay? So they have 2 killer resorts in Napa Valley. They have the Ritz-Carlton Lake Tahoe, which is just going to destroy it for the next 18 months with everyone in California post-COVID. They have the Pier House Resort, which just might be the nicest place to stay in Key West, Florida. Okay, it's like one of the only places in Key West that actually has a private beach. I actually looked at staying there once. That place will kill it for the next 18 months. They have the Park Hyatt Beaver Creek, which is just like an iconic resort in Beaver Creek. It's one of the best locations. Like, that is just like a no-brainer. They will destroy it for the next 18 months. They have the Hilton La Jolla Torrey Pines. That one's kind of like, it's a resort, but it also relies a lot on business and I think the medical business travel, so it hasn't been doing as well. So that one is almost like a 50-50 resort, almost like a business hotel. But then they have a place that you were going to stay at, Dave, a week ago.
Yeah.
And you told me a story about how insanely high the rates were, and they sold out, right?
They were sold out. I couldn't get in. Yeah, this one right here.
And do you know they just did $100 million worth of updates, and that resort is absolutely crushing it. Why are they crushing it? Because they're technically in America, so you don't need to get tested, right, at that resort.
That is incorrect. You actually, I was tested. You do need to be tested to go into the country, or it's U.S., but it is one of the places in the U.S. that we're still requiring testing, at least as of last week.
Okay, so they were talking about how you did not need to get that's really weird. I'm surprised to hear that. So maybe they changed it since the last conference call. But this resort again is just going to completely crush it. So
not to get into the resort, but to fly on an airline, even though it's a domestic flight, and you don't need to be tested to come back to the mainland.
Gotcha. Okay, so this is a company that is right now being held back a bit by the 5 city hotels they have. And the city hotels are pretty good. They just actually updated 2 of them and converted them from like Marriott Courtyards to like really cool hotels. One's called the Notary and the other's called the Clancy. I think one's in DC and one's in San Francisco.
Notary's in Philadelphia.
Excuse me. And then the Clancy must be the one in
and the Clancy's in San
Francisco.
Yeah.
So these hotels are really cool, refreshed, but again, they're urban, but they're the type of urban hotels that I think are going to do really well once people start traveling again. So I think they will benefit, minus the business coming back. I think they will benefit from just leisure travel in cities. So listen, I think they're positioned just perfectly. In fact, here's something really interesting, Dave. The Sarasota property, that Ritz-Carlton Sarasota, they generated $100,000 more in room revenue between December 23rd and I think January 3rd, what they call the holiday season. During that period, they did $100,000 more revenue. This year, right now, during COVID, than they did in the entire history of the hotel during that time period. If that is not like just a window to the future of what's about to happen the next 18 months, I don't know what is.
That looks nice. I might have to. If I ever need to go to Sarasota, I know where I'm staying. That looks nice.
Yes, right?
What's in Sarasota?
So, not much. I don't know.
I mean, it looks like a nice beach town. I don't know. Is that a place I need to book a vacation?
They also.
I mean, I would stay. Look, I would stay at that hotel. It looks awesome.
That looks amazing.
Yeah. You don't even have to leave to go find out how nothing there is there. You just hang out at the hotel.
I have a friend, John McCain. He goes to Sarasota, I think, a lot. His parents have a house there, and he tells me that it's like the most crystal clear white sand beaches in the country, kind of like, you know, that upper west coast of Florida is. So, like, if you just want, it's just a lot of older people, but it's beautiful beaches. And listen, for a certain demographic, it's a killer, just calm place to go vacation, and that is the destination. That they own Sarasota, like that's the destination in Sarasota. So I looked at their portfolio, guys, and I'm telling you, their portfolio is pretty close to flawless as it gets. It's really, really impressive. I mean, I spent time at each of their hotels, and again, the city hotels are going to take a little bit longer to come back. But that's why you're getting this stock, right, like at 35%, you know, lower than pre-COVID levels. So, and there was a little bit of dilution that happened over the last year, so you have to account for that. But this is a company that I just feel really good about being one of my last recovery trades. Now that I have to dig just a little bit deeper into a ticker that is not as well known, that is more of a show me stock, meaning like you're not going to really get, you know, inflated prices until they actually report numbers this summer and this fall. But I love the properties. I think it's just something I feel really comfortable being in this ticker. Again, I think there's a lot of visibility, right? It's just a matter of when that business comes back for their other hotels.
I feel like an idiot not knowing where Sarasota even is, so I had to look it up on a map.
West Coast,
and it's
Florida.
Apparently just south of Tampa, which, by the way, is where Megan goes to a horse show every year. That's where we recently did our southern tour of America using in our van life.
Sounds like
I think next year Sarasota, that St. Regis, might be where I have to stay.
I would do it.
So. I'm saving my favorite for last.
But your pick here is the REIT that owns all of those hotels. BHR is the symbol. Braemar Hotels.
Yes.
Just because it's made a comeback, but it has not fully recovered.
Well, Dave, here's why. I have absolute 1,000% confidence in every resort property they own that they are going to have, I believe, record years the next 2 years. I think those resort properties are the type of properties that are going to ask like top rate, like the rate that you see in the back of your closet door, like who pays this? They will charge it and get it for the next 2 years because they are in iconic locations where they're like some of the best resorts in those locations, right? And like they're going to kill it. And I think they're doing a really good job with the 5 city hotels. I think they're going to kill it there as well once people start to travel into cities again, which I actually think is going to happen starting this summer and definitely going to happen late summer into the fall, going into, you know, winter 2021-22. So I think once this company is operating on all cylinders, they are going to be producing record earnings. I think we'll see them at all-time highs. I'm not even worried about price. I just want to be in this company for the next 6 to 9 months. That's kind of my outlook for them, right? I could see myself sticking with them for the next 6 to 9 months.
So it looks like they've cut their dividend. Is that true? Is that?
Listen, all these companies, for the most part, had to cut dividends because they're having to conserve cash for their debt, right?
Yeah, no, I just wanted to be sure since we're talking about it. Somebody was asking, somebody said that there's a 10% dividend on it, and I'm like, maybe there was?
No, Braemar,
it does not look like there is at all.
No. Well, so they have another class of stock, Jordan. I think it was like an 8% dividend.
They have a preferred or something? Yeah.
They have a preferred, and I think it's still paying, I believe, actually.
Yeah, most of these, well, yeah, preferreds have to pay, right? That's the whole deal with preferreds.
Yeah, so I don't trade that stuff.
But in the preferreds, there's generally not, the upside in the commons.
I'm trading the common here.
Yep.
I like it, guys. I like it a lot. So that's, it's a few $100,000 position. It's not like a crazy position for me, only because it's small. But there is a stock that I talked about a few weeks ago when we did our last recovery trade episode, and I went deeper into this trade. I went deeper into my research. I spent a few hours on it over the last day or so, and man, I love it more than I've ever loved it before. And I had to go down. So I tripled my stake in. I think I'm at like, I don't know, $500 or $600,000 worth of this next stock. And then I purchased options, maybe 100K, 150K of call options. So all in, I'm probably like 750K into this trade. So those of y'all probably know what it is who watch the show. It is Playa Resorts, man. And let me tell you something about Playa. I thought I knew this company before, but once I really dug in to each property, because that's what I've been doing, they have like, I don't know, 18, 19 properties. My God, this company, they execute so well. I was floored. If I had spent the time to research their properties prior to my last trade, I would have invested a lot more last time around. So Playa Resorts has, I don't know, 18-ish resort properties between Mexico, Dominican Republic, and Jamaica. Okay? And let me tell you something. Some of these properties, they're almost all all-inclusive. Meaning that you pay one price, and you pay one price and you get everything. You get all your food, your drinks, right? Dave and Jordan, is there anyone that you've ever met that's more anti-all-inclusive than me? I hate all-inclusive resorts. I hate them. I hate them.
Not generally a fan, just because to make it all-inclusive, they bring down the quality of everything.
Well, let me tell you something. I would
to be able to afford to do an all-in-one price for everyone, for all of the food and drinks.
The hotels that this company has in the Dominican Republic, the two of them there, are so outstanding, and the reviews are so ridiculously good that I would stay at both of them in a nanosecond. They are actually the premier resort properties in the Dominican Republic, which is one of the hottest beach resort vacation areas for people coming from America and Canada and Europe right now. You guys have probably heard the buzz in Dominican Republic the last couple of years. They are the brand. They are it. Like, they own that market right now. Honestly, I'm blown away. Did you see, Dave, can you pull up that text I sent you with the TripAdvisor reviews for both of these hotels? I don't think I've ever seen an all-inclusive resort with at this price range with reviews, a review profile this good. I was just absolutely floored. Jordan, wait till you see this. It's so impressive.
I actually don't know if I can open these. Oh, here we go.
Okay, so if you can't open it, like, they have thousands. There you go. This is one of them. Which hotel is that?
This is the
Hyatt.
Zilara Cap Cana?
They do a lot of Hyatt-branded properties, right?
I don't know what that is.
They do a lot of Hyatt stuff. They have a couple Hilton things, but they do a lot of Hyatt stuff. This sub-brand that they're developing under Hyatt, the Cap Cana, I guess. I don't know if I'm saying that right, Cana. It's unreal. Like, look at that, 1,400 excellence, 14 terrible. The other one that they have down there is even better. Like, it's
it's the Ziva Cap Cana.
1209 excellent and 4 terrible. I mean, how do you only get 4 terrible out of 1,200 reviews? It's
I mean, terrible is pretty dramatic. The bottom two boxes
have you
are
been on TripAdvisor? Do you not know how many people rate hotels terrible on TripAdvisor?
Yeah, but there are a lot of terrible hotels out there.
Listen, a lot of hotels that I love have a more balanced rating scale than that. I read through a ton. I probably read through 150 of their reviews last night and was just really impressed. Like, this is a company I feel really good about. This is the perfect company for my resort trade. They only have beach resorts. And their beach resorts right now are already starting to kill it. Like, if you listen to the last conference call, they're already seeing green shoots. They're killing it, but they don't yet have the traffic from Europe, and they don't yet have the traffic from Canada. And there was one line in their last earnings call that I really focused on.
Chris, and Asia.
And Asia, they don't have it yet. But Jordan, even without all that, they are like, they're killing it with average room rates, right? Because America
they're killing with average room rates
in
the Dominican and in Mexico. But the only place that they're not killing it right now, just so we know, is the Jamaica one, right? Because there's more restrictions with Jamaican travel than there is. I think Dominican, they said, opened up in September. And Mexico's been open, so.
But Jamaica's coming fast and hard for you. It's coming, dude. Right? Jamaica is coming fast. Like it has
to be. They're looking around right now and watching Dominica to get all the dollars from tourists right now. So they have to be, just saying, hey, we gotta do this.
Well, even in your last pick, U.S. Virgin Islands versus British Virgin Islands, we can't travel to the British ones, and so the hotel availability there, you can get anything you want super cheap right now if you can get your way in. But the U.S. side was pretty much sold out. I could not book a hotel, so I had to change my vacation plans.
So I have utmost confidence in the summer 2021 recovery travel play, meaning that if I owned a hotel, if I owned a resort, I would not be discounting it $1. I would be charging top dollar and let all of my rooms go unsold for June, July, August right now until everything else sells up and people are forced to pay me top dollar. So I read this line, and it's what really got me going on Playa. This is from the last earnings call. Demand for the second half of 2021 has begun to accelerate. And remember, guys, this is like 6 weeks ago when they had earnings, right? And we believe it is the utmost importance to maintain price integrity and allocate inventory accordingly. These guys know what they are doing. They are not giving up $1, okay? These guys are going to crush June, July, August, September, and all fall. They are going to crush it because they know what they're doing, and that was 6 weeks ago. Could you even imagine now with all the bookings we're seeing, what's going to happen to this company? Literally every single resort they have is going to, I think, break records starting in July. Like, and here's what's interesting. So they get a lot of the Canada traffic. They don't get Canadians in the summer, right? Because Canadians during the summer, what do they like to do? Actually hang out in Canada when it's decently warm, right, during the summer. But in the winter, Canadians like to travel down to their resorts. Canada is a little slow to open back up, right? They're a little slower than us, a little slower to vaccinate. But by the time we get to peak Canadian travel season for resorts, beach resorts, Canada is going to be fully open. Everything's going to be fine. I believe that. So I think the sequencing of like openings for them is just going to crush it. Right now, they're going to kill it with Americans. Europeans are going to start traveling more towards the second half of the summer. Canadians are going to just rush in come fall and winter. I think that there's not a better company that I could think of right now for the reopening resort trade anywhere. And I looked at every single one of them.
Well, and think about it another way. Like literally, if you want to go out of the country and have a vacation with your family or friends or whatever you want to do, it's almost the only game in town to go to Mexico or Dominican Republic or one of these places, right? Because you can't go to Europe. There's a ton of places that you can't go, but hey, we can go hit the beach up. Let's do it.
Yup. And everybody dude, Jordan, we live in Texas, and even us, we want the beach, right? You don't even know what it's like to be stuck.
Here's the problem.
During
People
COVID
are like,
in
Texas has a
Chicago.
beach. We don't have a beach. Our beach sucks.
No, Jordan, you're not getting what I'm saying. We have been in warm weather stuck in COVID for the past year, going to lakes, doing stuff. People in the north part of this country, they've had a break during last summer, but they've been stuck in their house during COVID, right? Not being able to travel like normal for the past year. Do you have any idea how desperate they are to go to actual like Mexico, Jamaica, Dominican, beach resorts? Like
they got to get their tan on, Chris. They haven't had their tan on in so long.
Okay, let me just tell you that this is probably not even the right time to buy this stock, though, because I just saw in the comments that apparently people are blindly buying it right now, and it's up 2 to 3%. So let me just zoom in on one day view.
Don't do that.
Careful. Don't just buy it because we're buying.
Don't do that. don't do. I mean, I'm not telling you don't do what you want. I'm not a financial advisor.
That's a good point.
I'm not telling you not to do it. But what I'm saying is just like, just do your own homework.
It's less than 2% though. It's a less than 2% move. Now it is kind of dramatic to see that.
It was less than that because it was already up 0.5%, so it's up another 1.5% because of,
okay, so here's the thing. When I was buying Playa this morning, when I bought it, I refused to buy it when it would move more than a penny. I was like, I'll give you a penny. That's it. I'll give you 1 penny, and I would wait. Yeah. And I'd pick up this is a
that's what you texted me not to buy too much because it was moving. I mean, it moves too fast because it's lightly traded.
Don't buy more than 5,000 shares at a time, and don't give those market makers anything more than a penny. If it goes up a couple pennies, you really get desperate, fine. But like, this is I would rather personally, like, I might buy more Playa than I even bought today, but I'm not going to buy it. Like, I'm going to wait. I'm going to wait and find the right.
I want to see what the other one is doing.
So this is another one that, by the way,
the other one did it too. PHR's up too. Dude. These people.
This is another one that traditionally has a dividend. They don't have a dividend, so they cut it. That's the other thing is they've 25% reduction in force. Was that true? And then they've been doing a lot of cost cutting. During the pandemic, reorganized debt, pushed some of those maturities back to 24. So they've gotten a little bit leaner too. So that might be a good thing.
So here's what I love. By the way, my battery's down to 10%. Cut off randomly here. I'm going to shut my. I'm going to try to load my. Brightness. Weddings.
Or no, the reduction in force was somebody else. I don't think that was them, but they have worked on their debt. So. Okay.
Can we talk about weddings for a second? I think we are going to see insane amounts of weddings, right? The next 18 months. Insane amount of everyone's been postponing weddings, right? A lot of the people that actually did weddings, they postponed their honeymoons, right? But a lot of these resorts, they do a lot of wedding business. I think they're going to crush it. They already say Playa already came out and said they're starting to see an uptick in their wedding bookings. Like, I don't even think they realize what's coming for them right now. Like, between leisure bookings and wedding bookings, they do have one resort I think it's in Cabo, Playa does, that's more of like a business. Like, they do a lot of conventions there and stuff. It's like the one thing I love about Playa, these resorts are so big. I mean, they are massive. They were built for roaring 2020s. Jordan, by the way, roaring 2020s, all-inclusive. Is there a better time for an all-inclusive resort? No, this is it. Jordan,
go full Weekend at Bernie style.
One thing that I love that most people probably don't understand.
We just have had bad experiences at those all-inclusive resorts in Mexico. I don't know that I've ever been to one of the Playa brands, which is basically, it looks like Hyatt's and
all I know is that the only time I've ever been to an all-exclusive resort was with Chris, and I almost died.
I was on a different trip than you, Jordan, and I almost died.
Yeah.
Well, maybe you can't control yourself with the bar, man. That's not my problem.
I didn't say that.
Here's the thing, guys. There's one thing that you know what I need to have now when I go to a resort? It's the dumbest thing, but I have kids that are 11 years old. And the first thing I look at a resort, this is so stupid, but Jordan, you might be able to relate, maybe not yet, but you'll be able to relate soon, Jordan. I look for either like a lazy river or like water slides in the pool and stuff like that, because when I stay at a resort that has one of those two things, my kids are basically happy in perpetuity all day. Like, if there's slides or if there's a lazy river, they're done. Like, they are the happiest. It's like the equivalent of an arcade in the 80s. You know, when I used to go to like hotels in the 80s, I used to like want to have an arcade when that was real big. Like, you have to have water slides and lazy rivers. And I noticed their hotels at Playa, they've done a killer job designing them with features for families like that you just see as a parent. You're like, yep, my kids are happy there. They'll be happy there.
Do they have good, I want to know, have they improved the water urine filtration system? Like, is that better? No.
Stop. You just don't. That's why you stay at all.
Isn't that why? It tells
you drink so much, you don't care.
Is that why the lazy rivers are warm? Is it because of urine? Is that? I'm like, dude, thumbs down on the lazy river.
Dude, Jordan, you know that when you go to these resorts, you are so tanked, you don't know what's in the water and you don't care.
I'm not tanked. I don't know. I'm with my family.
On vacation mode, I'm not so sure about that. I'm not so sure I believe that. I've seen Jordan vacation mode.
We have some vacation photos here ready to share. Anyone want to see them?
Oh no! Is it weekend at Bernie's?
Oh man! So I will talk about. I didn't trade any. I did not go in deeper on this trade, but I felt like I needed to wear my Topo shirt today because it is still my favorite recovery stock. TAP Colson. Molson.
I wasn't paying attention. Did your cat just make an appearance, Chris?
Yeah, where is he, Sonny? Where's Sonny?
You got a photo bombed, apparently.
Where'd he go? Is he back here? Yeah, I did see him.
Did you taste the Topo Chico hard seltzer, by the way, Chris?
Yes, I did. I tasted all 4 of the flavors. I do not like hard seltzer, and I like this worse than I didn't like this. This is like my least favorite of the hard seltzers.
Oh no!
And that just goes to show it's not about what you think, because I did spend a good amount of time looking at social reviews on the Topo Chico hard seltzer, and it is about I estimated to be about 85% positive. And it is a differentiated taste. It's a taste that some people are going to like. It's a little bit stronger than some of the other hard seltzers, which I didn't like. And some people like that
stronger
taste.
how? Like stronger lime, stronger water,
stronger taste. No, it's a stronger taste. Like, LaCroix, or just in general, I'm not talking about alcohols right now, but just like some drinks you barely taste the flavor. Like some of the hard seltzers, you don't really taste the flavor. The Topo Chico, they gave you a lot of flavor, which I didn't like. Yeah. But listen, some people love that, and we know people love the Topo Chico brand. In general, I'm seeing very good stuff in terms of reaction on Topo Chico. Still seeing very good reviews and really good demand for the Rocks energy drink Zoa, which, as we know, is another big division of Molson Coors. So, yeah, I love it. It's still one of my favorite recovery stocks, but I'm not going to buy more right now, partially because I own so much. I think it would be insane for me to buy more. So that's it, guys. I almost
bought some of that hard seltzer I saw, but they only sell it in the 12-pack. I'm like, I don't want that much because of how much sugar I saw that's in that drink.
Oh, it's a high sugar one?
That's my problem. Yeah, what is the deal?
See?
I want like a real LaCroix, nothing added except for just a little bit of booze. Like that's all I want.
You can make that yourself, Jordan. You can just take LaCroix and
that is a really
vodka,
good point.
and you've got yourself a drink.
That's a good point. That's probably your best bet, or my best bet, because I'm not down with the sugar.
I'm with you, dude. I hate it. I kind of hate the Topo Chico hard seltzer. I'll never drink it again. In fact, I took a few sips, I poured the rest out, and I still have the rest of the case in my garage. So if you want to try them next time you're over, I have them here. Dave,
I do want to try one. Yeah. So
all right, I'll bring over the whole case to you. You can have them.
We'll do a taste test on the show next time.
Not me. I'm not going back.
You're done. I do like the shirt, though.
Listen. Yeah, the shirt. Listen, I still love Topo. It's still one of my favorite things in the world. I just don't like the hard seltzer. You know what I am looking forward to? I'm hoping they don't screw up, at least for me, because for my personal taste, the ranch water. The ranch water, I'm hoping they really kill it. That's going to be out in a couple months, I think. So for those y'all don't know, ranch water is like literally one of the most popular drinks in the South right now, especially coming out of Texas. It's essentially just tequila, lime, and soda water. And so the Topo Chico ranch water, I'm assuming, will be Topo Chico, some lime flavor, and I hope they put real tequila in. I'm not holding my breath on that.
I don't think
probably just put some random alcohol.
Yeah, I think it's.
You can't sell it in you can't sell it in grocery stores in Texas if you do that, right?
No, really. Is that?
It has to be true? Like a malt, right?
It has to be beer or wine based. So yeah, that's why all of these hard seltzers get away with it, because they're basically like Zima. Yeah, they're a malt beverage.
Yeah. You know what? I do want to try that other. There is a ranch water that Texas girl prayed that's supposed to be amazing, and I want to try that. She uses real tequila, and I was reading the story on her, and she actually uses actual good tequila, not just junk tequila in it. What's it called?
Are you talking about Skinny
Let me look
Girl?
up the brand.
The Skinny Girl margarita?
No. This is Far West Spirit, a Lone River Ranch water. It's that Texas who I don't know is Katie Beal Brown. I heard it is killer. So like I want to. I've never tried it, but if there's a drink that I would just drink straight out of a can like that, that would be the one I would try. Anyway, man, my we haven't done this.
Your
in so
brain
long,
isn't
guys.
working.
I can't even speak. My brain's not working.
This is the ranch water that you want to try?
Yeah. I do want to try it.
Black and white. I like the simple packaging.
Oh, and they also have it in
they got acquired. She's killing it.
Yeah.
They have it in an orange color too. That's the spicy flavor.
Oh, I like the simple
That looks
packaging.
good.
I'm into that.
I know.
It's nice.
And they killed it.
Yeah. And this one is red raspberry. A multi-pack. All right.
Ooh. I'm a sucker for a big multi-pack.
So let's talk real quick. I want to tease a couple episodes coming up. If you have not, first of all, please like our episode if you haven't. Yes, please like our episode if you haven't.
This is how Dave and I find out what we're going to do.
I find out what Chris wants to talk about. He's teasing an episode, which means I need to find something to write on.
You kind of know. We are going to do a big episode on Coinbase. And we have something really exciting to announce about Coinbase that we'll just kind of tease it right now. But that will happen either, I don't know, maybe tomorrow or next week. We have a special guest for our Coinbase episode. I won't say anything about our special guest, but it is an awesome special guest. And he could really speak to the Coinbase IPO as well as the general industry in general. He just understands it. He's a former Coinbase employee, okay? So that we know. And I cannot wait for him to come on and help educate us on the space. Because I think the more I research Coinbase, there's more questions and answers. Also, Dave and I have something really exciting to announce about the Coinbase IPO. I can't wait to announce that. And
exciting.
On top of, yes,
you have me intrigued. Is this exciting?
Exciting announcement. And I want to share some good news. Our company, Masterclass, that we put a bunch of money into 3 years ago. It's been 3 years, roughly.
Yeah.
At a $190 million valuation, just raised money today from Fidelity at a $2.5 billion valuation. So yes, that is pretty sweet. I don't know, it's like a 12 or 13x.
Is exciting.
Well, once the carry comes out, then probably 10x.
Chase did get us with the carry on that one. I looked into that. He was like a 20. That's before we really knew Chase that well. And
that was the first thing I did with Chase. That was the first thing I did with Chase.
Yeah, he screwed us. He got a 20% count. I'm really upset.
That's all right.
But
so for those who are not into the lingo, a carry is basically the money that the people who bring the investment to you get to take from your profits.
Yeah, we never do anything with like a 20% carry. But at the time, we really wanted to get in Masterclass, and we paid it. So Chase, listen, I'm going to make a couple $1 million on that, maybe more. Maybe by the time it IPOs, 3 or 4 million, and Chase is going to make like $600,000. What am I going to make Chase buy me? That's the big question. Like, I don't like him making that much money off of me. I don't like it. Like, he's gonna like have to do something. He's gonna have to take us on vacation or something crazy. He
just texted. He's watching right now, so careful what you say.
I'm gonna make him. Should we make him like rent a yacht, like charter a yacht, and like for like a week and bring? I mean, he could do that for like $70,000, right? Like he's gonna make over $1 million on this. We should make him get a yacht, and that should be. We should guilt him into that. I
think he'll agree to that.
And you know what the best thing is? Then he could tell his fiance, wife by then, that we're forcing him to do that, so he won't feel bad about spending the money, and then she'll get a free, charter trip out of it. So like everybody wins. Like everyone has a guilt-free way to go on a super extravagant yacht trip. Us, Chase, his wife, and then whoever else he invites. We should pressure him to do that. It's done. On the IPO. Am I out?
Perfect. No, you're still here.
I got a 5% battery warning. So,
all right, so we're gonna wrap up though.
Wait, no, Dave. They need to subscribe because we don't know when the Coinbase episode is going to be. You don't want to miss that. But we have an even bigger episode next week at some point, and we're going to have a huge announcement for the Dumb Money community about the Dumb Money event that we've been planning. I have been working hard to plan this event for the past few weeks. I'm super pumped. I can't wait to announce it. Unfortunately, there are going to be very limited tickets. We're paying for most of it, but we are going to have a ticket price just to help kind of make sure that only serious people come to the event. Otherwise,
it's a limited capacity venue.
Yeah. But it won't be super expensive, and whatever you're paying, it's just subsidizing what we're actually paying for the event. So we're not making money, we're losing money on the event. But I'm excited to announce it next week. So please subscribe, because when we announce it, I mean, the tickets might sell in like 5 minutes. So you'll definitely, if you love the community and you really want to do something in person with the community towards the end of this year, I will just give it a date. I'm going to give out a date right now so you can block your calendar. October 8th and 9th. Okay, just block out your calendar for October 8th and 9th if you think you might be interested in hanging out with the Dumb Money community and us and a bunch of other guests that I think are really exciting. So we'll announce it next week. Please watch our shows. Subscribe. Hit the bell. You have to hit the bell. That's what I meant. The bell will tell you when that episode is, right?
If you're not already subscribed, what are you waiting for? You need to do that. But then on top of that, you need to make sure the bell is not only on, but is set to all notifications to increase your chances of actually getting a notification from YouTube.
Chase is texting me now. I don't know if I should feel bad about pressuring him, but I'm going to do it.
People in the comments think that you are too easy. Instead of just chartering a yacht for us for a week, they think we should also have a Dumb Money yacht that that the community gets invited to, and or staying at an expensive all-inclusive resort that we were talking about earlier. So we maybe start at the all-inclusive and then take a little boat cruise and then end up at a different all-inclusive. That sounds fantastic.
Oh, that sounds fine. We'll do it.
Let's make it happen.
We'll do it.
All right.
All right.
That is going to do it for today. Anything else we want to say?
No, but we
either
might
that
be
or
back
pizza
tomorrow.
and beer at your house, Chris. Either one of those.
Do you want to have lunch? You want to do lunch at Cisco?
Yes. Let's. Oh yeah, that'd be great.
All right, so I'll meet you. All right.
Well, now and now anyone else in the city knows where we're going to lunch too. So
that's kind of weird.
We have had.
Maybe
when we used to like one of the very first times we did a live show, we did it like from your car while driving to go, and then one of our viewers joined us. Do you remember that?
Great lunch. Yeah, it was awesome.
All right.
We
are going to lunch now. We're Dumb Money. We will see you right back here. I don't know when we're doing another show, so you better have that bell set. We'll see you then.
Sometime.